Big candle move in here on the weekly last week, low to high 730 to about 772. So basically a $40 move on a candle in here, green candle, and basically on some average volume. So that is good. But we are having trouble with this 9-day EMA. You can see in the past it was a place for us to hit a nice resistance. It was also a good support here for a couple weeks, but we just could not get above it here in the past 4 weeks or so, but it looks like we're right up above that right now. Ended the day 769.88, up around $4 and some change from that previous day's trading session. So currently, where does that put us? Put us as far as where's are going to be our immediate supports and resistances? Anything above that 70 mark, we're looking at 789, and above that, we're looking at the 852s. That's a long way to go, I know, but that 759 is on the table. 800 psychological level is also probably going to be key for us in there. But as far as multiple touch points at the 800s, don't really have a lot to work with. But it's, again, we're probably going to overshoot things. You know what I mean? 800 is a level, but above that, you're looking at kind of 805, 810, things like that. Support wise, it is going to be that low in here that we had from this past week. So 728 to about 730. Anything below that, we're looking at this lower trend line here, right around the 710s. Now, on the daily chart, you can kind of see where everything has been trading for the past week or so in here. Again, here's your line at that 790-ish mark. Above that, we're looking at this 200 SMA right around the 830s. But you can see how when we kind of overshoot that 800 psychological mark, you have some points here as far as support at 810. Here's some more around 812. Here's another one here around 805. So again, 800 psychological level is not really anything to be concerned with, but we are going to overshoot that. It's not going to stop right at 800 and pull back, right? You're going to kind of overshoot it, 805, 810, and then get a pullback in there. But overall, basically that 790s is kind of what we're looking at as for a better support for us. We also have a gap to fill up here on the daily, but that's a long ways away. We have to worry about the 200 SMA. We have to worry about the 852 before we come all the way up here and fill that gap right at the 887, 886 mark. IV rank in here is still relatively high, so good juice in here compared to itself. $45 expected move in here, so obviously it's a large trading stock. It's pretty expensive in here. Obviously the options are going to be just as well. So $45 expected move in here by Friday, $51 by the following, go all the way out to your July expiration, right around an $85 expected move. So that kind of puts a lot of numbers on the table here for us, but we have this 9-day EMA at the 752. That should catch us. If not, then we're looking back down here right around that 720-ish area. Again, the 790s, and then we're looking at this 200 SMA here on the daily for your 830 mark. So we'll see what happens coming up in here in Eli Lilly. But again, this 9-day EMA has been holding a lot of weight for us on the weekly chart. So that's not going to, we're not calling that an immediate resistance, but depending on how far we're gapping down on Monday, that could become a area for us to kind of watch out for. So kind of keep that in the back of your mind as you're looking at all these other points in here of supports and resistances with a $45 expected move by this Friday. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.